Good afternoon, everybody. We're going to get started. It's 1 o'clock. It's a great pleasure to introduce to you Dave Wilson. Dave is the non-executive chair of Lad Bible, a media company, and non-executive director of Music Magpie Plc. During Dave's 12.5-year tenure at GBG, a software company, as CFO and COO, the group evolved from a small UK operation with a market capitalisation of 14 million in 2009 to a global brand of 1.7 billion today. Dave was named FD of the Year in the 2013 at the Thornton Quoted Company Awards and FD of the Year at the 2015 FD Awards. So it's safe to say that Dave knows a thing or two about managing business growth. He's very kindly prepared a presentation to share with you today, Scaling a Business. If you have any questions, please add these to the chat box and we'll present them to Dave at the end. So with that, I'll hand over to you, Dave.
Many thanks, Lois. Well, thanks for taking time to attend this. And what I'd like to do is, first of all, if there's any questions that in the framework that I give you or the approach that I give you that you want further details on or totally disagree with or challenge back or however it may be, my contact details are at the bottom of the presentation. So, you know, feel free to give me a call or an email and I'll do my best to, you know, help you through this. The reason I'm doing this is that in the years I've been, you know, COO and CFO for several businesses, it's my time to try and give a bit back. And if I can give a bit back to my fellow finance colleagues, then I'll feel good about that. So the audience, I think, on the call is pretty large. So because it is a large audience from different sides of businesses, different locations, then it will be difficult to cover everything that people may be looking for this. So what I'll attempt to do is give you a framework, you know, a straw person of how you can scale a business. And the other key thing is my experiences of scaling the businesses it goes back quite a few years with Technology PLC, scale the business from 200 million up to 750 million over 4 years. Envirophone.com, that was $1 million. These are revenues, by the way, $1 million revenue up to 33. GBG that Lois has just mentioned, you know, market cap of 14 up to 1.7 billion. And then the Lad Bible, which in our second year, really, we're sort of doubling the business every two years. So that's my experience. As you can guess from that, that's mainly in the TMT sector. But I think quite a lot of this will apply to any sector that you may be in and any scale of business that you are currently in or looking to grow into. So if I then just flip over to the slide, really, that on scaling a business, I think it's all about judgment calls at different points in time. And the key judgment calls are around people, strategy, how you execute the strategy, and resources in cash. Yeah, I know everyone will know this. I'm just trying to say these are the things that, you know, as you're growing a business, whatever your role in the business, you will come across various ingredients in, you know, in these 4 subject matters I'll cover. And what I'll try and do is I'm a very simple person. If something's complex and I don't really understand it, I try and simplify it. So the most important thing in scaling a business, as in any business at all, is the people, your colleagues, your boss, the people that work for you. So it's the most important thing, in my personal view, that you grow and coach the talent around you. And then moving that to the organization capability to try and coach and grow the talent within the organization. It's a personal belief is that people are the essence of an organization. So if in an organization that doesn't really treat people as, you know, having different needs, different stages in their life, things like that, then that's something I would strongly recommend you change. But having the people there that are motivated, that are happy, that are comfortable, that are pushing the boundaries, and there's collaboration and interrelationships and people helping people out, then you're in a good environment there where it makes scaling your business easier because there'll be less barriers to scale. The second key thing is strategy. And there's so much research on strategy, so many books written on strategy, that I've developed a very simple way of a couple of simple ways of defining the strategy in order for the company to follow. So the first is, it's going back to a very old research note, actually, of Harvard Business Review, which was the 3 paths to market leadership, and it's Michael Tracy and Fred Vorsima. And if I just simplify the paper, which I've applied for many, many years, what it says is that to be a market leader or to be the best in the market, you have to lead in one of these 3 things, and in the other 2 be better than above average compared to the competition. And these 3 things are customer intimacy, how you service your customers, how close you are to customers, how you adapt the business to the customers. Product innovation, are you generating new innovative products? Are your products market leading? Or operational excellence. Operational excellence is effectively, are you the lowest price and can you win on price? Yeah, in my simplistic terms. So examples of those, in terms of the customer intimacy, businesses like Slack, Workday, a classic one, Southwest Airlines in the US, these are from the business books and so on. Product innovation, Apple are up there, and obviously operational excellence, Amazon. Now you say Amazon have got great customer service, that because they want to be better than the other people that are around there as well. And you'll also say that Apple have got good customer service, that's because they want to be better than other people around. But Apple are a product leadership business, and Amazon are operational excellence. Everything has to be lowest cost and everything else. So the reason for saying focus in on those is that have a look at your business as it stands and just do a template to say, well, how do we stand on those 3 grids on the chart? What I've done with each of the boards I've worked with is I've put a chart up on with those 3 grids on and just give people's views. Are we above average? Are we the best? Are we average or below average? And that gives a consensus view on what needs to be worked on in terms of strategy. So that really gives a map of things that you need to build in the organization to become the best or the market leader or to scale. Yeah. The other thing is, once you've established your strategic options, and there's always a list of 3 to 50 of them, it's really important to try them, and iterate and regularly review process, because all organizations will have a number of strategic options. The key thing I found over the years on this is to regularly review your strategic options and progress against them. And what I mean by regular review, it's not an annual strategy review, and it's at least half yearly, preferably quarterly. Now, if you take the Lab Bible group, we're reviewing because it's a dynamic marketplace, our strategies progress every 6 to 8 weeks. We spend 2/3 of a day running through those with the owners of those. So the regular review can give you the ability to stop, start, or continue with your strategic options. Really important to regularly review. And the other thing is that in the strategic discussions, you get different time horizons. So some people will think, 3 to 5 years out. Some people will think next month. Some people think same day. So it's really important that you don't really need to be years ahead. You just need to be ahead of the market in thinking, or your competition in action. Yeah. Now, sometimes, a certain market, when you're in manufacturing, things like that, it takes years to build and become perfect in a particular manufacturing capability. So the different time dynamics will change depending on what particular market that you're in. The next section is execution, and I'm using old phrases now because I'm a bit old on these things, but so what value does a Ferrari bring if you can't drive it? So i.e. you can define a strategy, but if you're not driving the strategy, then it's worthless. So the execution, as you'll hear from all the textbooks and people that have been in business, and you'll learn it through your theory as well, is the execution is I'd say second to having the right people and the right motivation, but the execution part is fundamental. So I'll cover a few things in there. Hopefully I may introduce things that you may not have come across. So in businesses that I've been in, I've done organic growth and M&A, mergers and acquisitions, and or combination. So there's no ideal route on that. If you've got a big market, growing market, and it's fragmented, an M&A route is a good one. If you're expanding geographically, I call it geo expansion, then M&A is a good one to step into a new country, through buying an incumbent there. So having a clear path on the execution of, is it organic, is it M&A, or is it both, is really important, because you need resources to buy businesses and to screen for businesses to buy, and you also need resources to integrate once you've bought them. So having that clearly in sight is also important. So the other scale-up barriers are, these are common sense points, is the market dynamics. If you're in a slow growing market, then you're not going to be able to scale fast unless you buy up and take the market inorganically. Leadership is a key constraint, actually. If the leaders of the business haven't got the ambition to scale or to grow, then that just sets a dark shadow for the rest of the organization. Also, as you're scaling, the infrastructure always gets strayed and puts under pressure. Everyone in finance knows that. The other key thing is you really want to get the optimal performance. You just want people to be just outside their own personal comfort zone as well, because people excel the best when they're just beyond where they're very comfortable with, and that helps scaling the business. The other one, which may be a new context for people, is you have to conquer complexity. And I've put in there, beware the valleys of death. Now, what I mean by that is an employee count is more reflective of complexity. And there's different scale-up mountains, hence the pictures at the bottom, that when you get to the top of one, you drop down and move to the top of another and then drop down. And these tend to happen around quantities of employees. So if you're an entrepreneur, you've got 1 to 3 people, you've got direct access to them. If you've got 8 to 12 people, then you're starting to widen the sphere. When you're 40 to 70 people, you've got your first hierarchy in, you've got one layer of management in. And then when you've got 300 to 500 people, then you've got, another layer. And then when you move up into the beyond 1,000 people, then, there's more layers introduced. And that layering slows down communication, slows down the ability to everyone to see, listen and hear to scale a business. So that's the valley, I know it's a horrible phrase, but the valley of death is really important to be aware that as you scale, these things will happen. And the way that you see it is, decisions don't get implemented fast. You'll get multiple takes on a decision, multiple interpretations of decisions, and people are not hearing what's happening close to the customer or what's on the ground. But the scalings I've just talked about are, if you're coming into those quantity of people in your organization scales, then just be aware of what's happening. We're seeing it in the Lab Bible group at the moment, multiple layers, trying to break the business down into smaller units to have more speedboats, as we call it internally. So that part about the valleys of death are really important. The other is, and it's a bit of a no-brainer for the finance people on the call here, is your unit economics in the UK market, European markets, have to have a cash profit or a clear pathway to profit. In the US market, there's more tolerance of a loss-making business that's growing really fast and eventually will make profit, because they take a longer-term view on investment OPEX. So being aware of the clear pathway to cash generation and profitability is really important. So you have to be fairly confident there as the finance people in the organisation. And then a couple of for instances, it's like, be very happy to say yes to people that you trust, clear accountability, and big incentives for big growth, or as I call it, like leverage incentives. Because if there's big incentives for big growth there, then people get some reward, as well as being proud of the business of having achieved those growths. The other things that I think are just red flags or no's will be, try and cut bureaucracy. And that's tough for a finance individual, but the multiple sign-offs slow things down, split accountability. So those are really things. Try and simplify the sign-off processes you've got in the organisation. Also, if decisions are slow, that tends to be down to bureaucracy around, or decisions can be quite judgmental, so people not having the confidence of making mistakes. So any indicators of slow decisions there, you really want to try and impass some confidence back to the organisation to say, yeah, let's try and see if we make mistakes, that's how we learn and move on. It's a commonly used phrase, but you have to believe that as a leadership team and a management team. And also politics. If people are having second and third guesses on things, that just slows the organisation down as well. And as the organisation gets bigger, there's more of that gets introduced. And also, as the organisation includes people from other organisations that have been political in that respect, that can slow things down. The other point is just be aware of I've called it like crossing the chasms. There's a couple of textbooks on this about crossing verticals, but when you're moving from one geography, like I've done in GBG, into 16 geographies with customers over 70 geographies, when you step into a new one, really don't think that your home geography is applicable to the new geography you're stepping into. You've got to be clear that the right drivers and problem statements being satisfied are correct for that geo. Also, when you're moving from one product to multiple products, you've got to really make certain that they are suitable for good growth drivers. I know it's an obvious because there's many books on it. When you're crossing, say, a sector, when you've been selling into health and you move into financial services, or you're selling into tech and you move into retail, there's different customer dynamics on that. So your go-to-market resource needs to be different for the verticals that you're moving into or crossing the chasm into. I think they're pretty much, people are experienced in that. But if you are stepping, or you notice your organisation is moving to a different geo, to a different product set, to different sectors that will have an impact on the organization. And if that's not clearly thought through, it will slow the scaling capability of the organization. And the last point really that I'll cover will be the cash, which we all know about. And this really comes back to the core realm of people in the finance team, if you're not on the leadership team or can influence the leadership team. And some really, really important learnings that I have had and consistently applied are have a conservative financial forecast, because if it is conservative, a few things. First of all, it becomes a positive environment. You beat the forecast. The second thing is that you can make decisions based on a conservative financial forecast. And the third is, if you are raising equity, capital, or bank money, or money from the stock market, that those numbers are 90% likely to be beaten. And one of the mantras I've always used in businesses that I've been involved in is, whoever it is, a business owner, you have to beat your forecast, even if it's by $1 or even if it's by £1. And the forecasting, we've always done in all the businesses, at least a monthly rolling forecast, at least. And the monthly rolling forecast typically is to the year end or the year end and beyond, depending on your time horizon for visibility of where your revenue comes from. So that's point one, have a conservative forecast. And you'll get different biases. You get different entrepreneurs, leaders saying, yeah, we've got to forecast up here and get to it. But then you type of lose confidence in the outcomes. If you're a finance person, the best way to do it is have conservative forecasts. I'm probably just preaching to the converted on that, or maybe not, I don't know. The second thing is, one of the key constraints for any scaling businesses, as I said at the top of the call, is your resourcing cash. And I know everyone knows cashes, but the cash allocation and the resource allocation is really, really difficult. If you think about where do you place your investment monies, I've always gone back to a pretty old school, I think, which is activity-based management. And my simple approach on that has been, if the investment monies are adding something that have a direct impact on the revenue line or the ability to receive cash sooner, and the unit economics work on that, keep putting money behind it, because it's a no-brainer, unless you've got the wrong people in the role, that you will get a return on the money and it'll self-generate cash. So prioritize investment around added value, which has a direct revenue impact and a direct cash impact on the business. Everyone in the business will say, yeah, we add value, and so on. But it has to be a direct line of sight to the revenue and or cash coming in. So in the finance area, I've always heavily invested in cash collectors, because they improve the receivable cycle and you get your cash that you can reinvest in. But a lot of people say they add value, but you need tangible line of sight how that's adding to the revenue or the profit of the business. Other areas on those will be, sometimes you can reinvest to save money, so you can invest in technology to save OPEX. Hosting capability is a bit of a no-brainer nowadays, but you can save a lot of money, and you don't need capital investment for it. And the other point is, try and automate things where you have things from a regulatory and compliance thing rather than adding people into it. So your annual accounts production, or your other government reporting, your VAT returns, or whatever it may be, invest a bit to get as much as that automated as possible, either in a simple software package, or Super Excel, or whatever you may use. So that's really just coming to the end. I know I've talked through, I've got a habit actually of talking slightly too quickly, so my apologies for that. There's some there's capability of asking questions, and Lois will let me know those. If you don't have the capacity or can't quite get the question over, or whatever it is, I'll say my contact details are below, and I'd love to be able to help somebody in their own career path, and also to to help them personally on their own journey. So please don't be afraid of contacting me direct if the answers to these questions are not clear enough, or you disagree with it. So Lois, I'll go quiet, take a quick sip of water on that, and then pass over to you to I don't know how many questions we've got, by the way, but pass over to you to ask, if that's okay.
That's great. Thank you so much, Dave, for taking the time to prepare and present on scaling a business today. It's been really great so far. Thank you. Yes, I think you're right in terms of there's a lot of information there. So I think it's probably mostly after the event that perhaps people will sort of come up with questions, etc. And thank you for providing a facility for them to be able to do that ongoing. I think one of the things that would be quite interesting, and I suppose this is a bit of a in summary, and for you personally, what has been the biggest challenge do you think you've had when scaling a business over your career?
I would say personal time, because and I was fortunate to have in GB Group or GBG to have a business coach, and what I learned from that is to plan ahead rather than firefight, or we used to call it orange time, where move from one thing to another, rather than try and plan 12 months ahead, plan 3 months ahead, plan the week ahead. So it took me, I'm quite stubborn on a lot of things. It took me about 18 months before I realized that if you plan ahead, you can prioritize things better. So I would say that that's been the transition from firefighting into try and plan and prioritize what the business does and what you do to help the business has been the most challenging. The other things are, handling egos is another a challenge for anyone. I think is that I think you find organisations that scale typically don't have too many egos in the in the leadership team. But if you have somebody with a big ego, it's how you handle that. And it's just trying to get them, so quite a lot of the time when they're not in a forum, so where the ego shot can't be shown. So one-on-ones tend to be a good way of handling that scenario. Sorry, a long answer to your question.
No, that's great. Thank you very much. There is a question here that I'll read out to you. I would be interested to hear your thoughts on how you, as the finance leader, manage the difference between managing a conservative forecast and ambitious executives picking a large number.
Yeah, being very that's a good question. That being very clear on it, I call them different things. So in the various businesses we've had the ambitious executive plans as the targets or business plans or operational targets or whatever it may be, have a phrase for it. And then the other one, call it the base forecast. So by having the executives saying we want to hit 100, and everyone's viewing the finance team of saying, well, realistically we're at 60, 70 at the moment, just have a range. And then what happens is you work through the detail of when you feel comfortable as a finance community, you can move you 60 up to 70 up to 80, or do things differently to get up to the 100. So the simple answer is try and get into the executive's mind to say, yeah, we really want to go for that number. Let's call it whatever they feel is the number, and then we'd always have the check and balance of, the finance team number, whatever it's best to call it at, base plan or conservative forecast or whatever it may be.
Great, thank you.
That's the question. Yeah.
Thank you. There's another question here, Dave. Do you have a view on the best point in business growth to consider becoming listed, even as this is on a junior market? What are the judgments in this?
Yeah, that's it's a great question, very complex one. So I'll see if I can break it out. So we keep it to the UK market because I think I've got a UK audience on here. The AIM market tends to be more productive if your valuation is, your market cap, your valuation is above 100 million market cap or valuation. You get more traction when it's above $500 million, and you get US interest when it's above $1 billion. So if your market cap of your private business, and you can apply, EBITDA multiples or revenue multiples against your peer group, is sub 100, I would wait a little bit to go to the market, because the reason for that is there's so many fund managers on the market, and there's 5,000 to 10,000 organizations looking for cash, looking for shares, looking for investment. So the fund managers can only really view 1,400 companies a year, and they probably have 3, 4, 5 times the amount wanting to be seen. So if you're small, they have to filter it some way, to small caps and micro caps, and then large caps. So the 100 million is a key threshold. If you're on a good trajectory to get to there, then all well and good. The other key point is if part of your scaling plans are to do it inorganically, then the market is the AIM or the main market is really good, as long as you've got a sound strategy of defragmenting a market or scaling up through buying businesses, because the access to capital, as long as you make the good returns on it, the market is brilliant on that. And the AIM market in particular is, if you've got the right articles in play, I've done 4 secondary raises, and it takes about 2 weeks. You do your investor presentation, agree the deal, investor presentation, you present for a week, and the money comes in the following week. So the access to capital is can be quite short, assuming you're buying the right business, of course, which you wouldn't put to the market if you weren't. So quite a long answer to a great question, but there's no single thing. It's those those factors I think are quite important in it.
That's great. Thank you very much. So we've got a question here from my colleague Christine, who Dave, and she said the growth of GB Group is very impressive. When you entered new geographies, what was the main strategy?
I would say that there were some factors. That the main strategy will be always around people. So having the in-country organization to be as localized as possible, and it's not flying somebody out from headquarters and knocking on the doors or doing the marketing locally. So I think because it's remote from wherever your business is, you've always got to get a high quality person to start generating the in-country teams. Now, with GBG, we going back to 2014, we bought a business in Australia that had people in 6 territories at the time. So that gave us a bit of a leapfrog. When we moved into the US, it didn't work the first time. We had a 6-month trial and we just couldn't get the market dynamics to work. We bought a business of which had a US part of it that we then used to grow to the channel market. And then we found the ingredients to supercharge the growth there. And then back in 2019, we spent 300 million buying another business in a different sector. So I'd probably just say have the right people locally, trial and see. So if something works initially, then it could just be good luck, or you just hit on a gem. If something doesn't work, don't give up in the market because that just didn't work. Because it could be a person that hasn't made it work. It could be the poor timing. There's multiple factors. So test, trial, fail fast, those sort of terminologies, but always have the right person or people. And it may be a couple of people that sort of buddy up, in the local market. In the Lab Bible group, we are, it's not down to me, that Solly that runs a business. They're brilliant at having people pairing up to create something different. So it's not necessarily a single person. It could be 2 people that work together well with different skill sets. So I feel as though I'm not responding to these simply, Lois. So hope that's helpful.
I think it's been really helpful, and I think it's been really useful that the way you put your ideas and points across. Some of these issues are very complex and subjective to different organisations. However, I think you've been able to communicate information that will help everybody, sort of no matter how big their current size of their company is, etc., and what they're trying to achieve. So I think that we're closing up for today then. Again, thank you so much, Dave. It's been really helpful. Thank you on behalf of myself and also the audience for what you've been able to deliver today, and your offer for people to be able to communicate with you after the event. So yes, I think that unless you have anything else that you'd like to say today, we're probably good afternoon.
Well, I just think, thank you for taking the time for everyone. I know everyone will be busy. I've been there, done it so many times in terms of being busy and trying to allocate time to things. So thanks for taking the time to allocate. Ask people if you need help, because people have had some experience somewhere. And if I can't help on the challenge that you're facing, then I may know somebody that does, type thing. And stay safe. We're not through the pandemic. We've got winter coming, so stay safe with yourself and families, and enjoy yourself, make the most of it, and have a bit of fun, and make the most. So thank you, everybody.
That's great. Thank you, everybody, too. Okay, bye-bye for today.